Holy smokers, this ain't no dang jokers, folks. We have a stock market that is so far caught off guard, folks. This is unbelievable, okay? We got an action-packed, very busy video to get into a lot of things. We got to talk about a lot of stocks in today's video, a lot of things going on in the market. Obviously, inflation numbers, what this means for the stock market moving forward, what this means for countless stocks moving forward. Yeah, it's an action-packed one, folks. I appreciate everybody joining me as always. Thanks so much. I hope it was another phenomenal day for you guys here today. It has been absolutely incredible. We've had our way with this market for 9+ months now. At this point in time, eventually things will work against us, but for right now, we will enjoy the moment, okay? Because let's just call it what it was. For a year straight, the market did nothing but work against us, and everything went wrong that could possibly go wrong. And now we have the complete opposite situation, and the bears are just getting it in their face again and again and again. I saw so many countless people, right? You know, you kind of, if you really want to feel the bearish community out, actually go on Twitter, because there's actually most of the bears actually like Twitter and they tweet on there, okay? And countless of them thought, oh, you know, this is going to be the wake-up call. Inflation's going to go massively higher. They were predicting CPI going to 4 and all these crazy numbers and things like that. And they just got it thrown back in their face again. Just completely decimated here today. So, yeah, action-packed video. Thanks for being subscribed, folks. Lots to talk about. So, first place I actually want to talk about is something very interesting going on in the market, okay? And I mean very interesting. And certain stocks are starting to catch major bids. And not just major bids, but it's absolutely incredible, okay? A good example of this is Fubo, right? Fubo is up another 16+% today. Now, do you want to know how shocking this performance has been? Guess what the 3-month performance is for Fubo stock. You are about to have your flapjacks flipped. Check this out. This stock is up 100 and almost 65% in the past 3 months. If you could make 165% in the stock over 3 years, that's a win. 5 years, that's a win. Heck, even 10 years, that's a win. This stock's done it in 3 months. It's absolutely on fire. This is a speculative stock I hold, right? And we were down heavily on the stock just 3 months ago or so. And now, I mean, we're up. We're literally up on the stock. I mean, that's a shocking move here. And, you know, it's interesting because I've been trying to see, like, what's going on here with Fubo, okay? Like, why is the stock moving so much? Is it just something with the market that it's like, you know, let's bid up these sorts of stocks, like these you know, let's call it more speculative stocks or, you know, going more risk-on environment? Like, what's going on here exactly, right? So it was interesting. So I went to David Gandler's, who's the CEO of the company, his Twitter page, right? And I just want to see, like, did he tweet out something recently or something, you know, what's going on here? You know what's interesting? I found a few interesting replies, right? This one's talking about, he's from Korean Fubo Group, right? So he's an investor, I guess, from Korea. You know what else is interesting? I was going a little lower, and this guy says, I'm also an investor from China. So I don't know, maybe Fubo's getting around in Asia or whatever as an investment opportunity. Like, I don't know what's going on there. I just thought that was a little strange. Like, because I do sometimes think, I'm like, where's all this money coming from? You know, because if you're going to get a stock to go up 165% in 3 months, you're going to need some big money coming in. And I understand Fubo is not a huge market cap. It's less than $1 billion market cap, right? But still, we're talking about a market cap on Fubo that's probably 800 million, just off the top of my head. That's just a guess. So, you know, you need some serious money coming in. Now, this announcement happened recently. Spotify's former vice president of design joined Fubo here recently. So maybe there's some excitement around that, pulling in a big name to kind of help the company out. I don't know what's going on, but the one thing I'll say is, like, I'm very pleased with this performance because this is the slowest time for Fubo's actual business model in terms of signups. This is always like July is the worst. And then at the end of August, things start to pick up again. But it's interesting because obviously we're in July now at this point in time, right? The end of August, Fubo starts to pick up majorly in Google Trends, and obviously massive amounts of people sign up for it in football season, and hopefully we see bigger numbers than we've ever seen throughout history. So far, every single football season, basically interest for Fubo goes to a new record high. So hopefully we see that again this year. And so seeing the stock price doing what it's doing makes me feel pretty confident. And I kind of was thinking, because Fubo did go up on price recently. So basically the folks that are going to be signing up for Fubo this football season for the first time, right? They're going to have to pay a more substantially high price than people used to have to pay in past years, right? But the thing I was looking at kind of from the value proposition is, it's still the best deal for bang for your buck you're going to get out there, even though they've gone up in price. So the company should be able to get closer and closer to profitability here and show better and better margins between the advertising business. They hired a kind of a marketing expert to build out the advertising business who just started it was around the end of last year, beginning of this year, so we should really start to see those advertising numbers coming through. But their plans are starting at $75 now, but if you're used to traditional cable, like most people with traditional cable, they're paying 100 plus. So I think Fubo is going to continue to steal customers away from ultimately, let's call it the traditional cable companies, because most people for their cable bills, especially if you got a bunch of channels like you want to have, right? You're paying $100 plus, and Fubo comes under those price points. Even what I have, which I have the most insane plan Fubo offers, right? Because I'm a huge college football fan, so I need all this ridiculous amounts of channels, and I like to watch 4 games at one time and things like that on a Saturday, right? For everything, it's still less than $100 a month, and I couldn't ask for more. Literally, that's insane, right? You look what I have, and that's just unparalleled kind of in the marketplace. So kind of looking at it from this perspective, I wouldn't be surprised if Fubo continues to attract a lot of customers. Now, in terms of Fubo's stock price, I think the important thing to understand about a stock like this is this used to be a $40 plus stock, okay? And so just understand if this momentum continues, it can easily go to $10 to $20, and it's not even a crazy thought. For this stock to go to $10 to $20. It's been a whole lot higher than that in the past. This stock would need to go above $40 to break a new all-time high. $40, okay, it's a $3 stock. So nonetheless, if Fubo continues to execute, they get to profitability and closer to profitability as these quarters tick along. They continue to grow the advertising business in a substantial way, and their users are just much more profitable than they used to be, a couple of years ago. I mean, the sky's the limit for this company. That's all I know about that, okay? So it's a speculative stock, but we'll see what happens there. But interesting in terms of the stock price performance. Another stock that is red hot, maybe not as red hot as Fubo, but Meta continues to perform, right? This stock up very nicely again here today, right? Congrats to all Meta shareholders out there. The stock just performs absolutely amazing. We're now up close to $340,000 on the stock now at this point in time. It's performing amazing. Now, in relation to Threads continues to pull in users day after day after day, now up to 108 million Threads users. And the beautiful thing about that is whenever Meta kind of wants to notify more folks about Threads, they're going to be able to over the next few months and next few quarters. So Meta's going to be able to push this thing as high as they want to push it, in my opinion. Whether that's 200 million users, 400 million, 600 million, they're going to be able to push this as they please. And if you were around in the days after Facebook acquired Instagram, I don't know if you guys remember, this is we're talking about this is 2013, 14, those sorts of years. Facebook started to integrate Instagram so well with, being able to see images on Facebook that were posted from Instagram and vice versa. And they were able to kind of grow those together in a massive way. And so there's so many things that Meta can do for integrating Threads kind of into Instagram and Facebook over time, if they please to do that, if they want to do that, that they'll be able to grow that platform as big as they really want it to grow. If they want to grow it to 200 million users, they can grow it there. If they want to grow it to 400 million this year, they could grow it there. It's really up to them, in my personal opinion. And that's just, no one can compete with that. It's just such an unfair advantage. Certain companies have unfair advantages. I look at Tesla. Tesla has a super unfair advantage against all EV competition. It's not fair, because they built out so much of everything you would possibly want to build. It's impossible to compete with that company. And in terms of Meta on the social platform side, it's literally impossible to compete with them. And I think Musk is starting to realize that competing with Meta is as hard on the social platform side as competing with Tesla is on the EV side. It's an impossible competition. So in terms of Meta stock price, I wouldn't be surprised if the stock continues to perform tremendous throughout the remainder of this year. I mean, I can't wait to see the EPS numbers in 3Q, 4Q. Oh my gosh, okay, the growth year on year is going to be absolutely ridiculous. So yeah, and I continue to forget, Meta Quest 3 is coming, right? I mean, my gosh, the numbers that's going to do this fall is ridiculous. So many exciting things going on for Meta. It's ridiculous, right? Now, Amazon continues to perform pretty well, not like Meta's performing, right? But I don't know if you guys know this in regards to Amazon, good old Amazingzon, and what's going on here essentially. Well, right now, Prime Day is going on, right? And so a lot of people are interested in Prime. Now, it was also interesting because I was kind of looking at Google Trends in the past and whatnot, and the more I kind of thought about it, I'm like, who even like searches Amazon? Like if you're an Amazon customer, you have the Amazon app now on your iPad or your phone or whatever it is, right? Like that's how I order from Amazon. Like I very rarely actually go to the old school website. I go to the app now at this point in time. So Prime Day is going on, and the interesting thing is Wall Street doesn't even put a lot of faith into this. So when you see Amazon stock up, it's actually not because of Prime Day. Like most of Wall Street actually doesn't even care about their e-commerce business. I know it's hard to even imagine because all of us as consumers, like we understand how important Amazon is to our lives, right? We likely place orders on Amazon every month, sometimes every week, sometimes, some people almost every day, right? And it's incredible to see that business, but ultimately what Wall Street really cares about is AWS because that's where all the profits come from. So you just got to understand, like, Amazon stock is really, at least in the short term, I don't think it's going to be like this long term, but in the short term, it's how is AWS doing? What are the feelings around AWS? And if feelings around AWS are getting more confident, that stock will continue to roar higher and higher. If they report accelerating growth at AWS, get ready for that baby to fly to, 150, 170, 190, and it'll happen pretty dang quickly. If, AWS continues to kind of lag, believe me, like people will kind of stay out of that one. Wall Street cares about AWS. E-commerce business, they're kind of like, that's cool. They don't really care. By the way, while I was prepping this video, it was interesting. Tom Lee went on CNBC, so I just thought that was fitting on a day like today, right? To see Tom Lee go on there. I might have to react to that on the reaction channel later tonight or tomorrow or something like that, okay? Now, we don't talk a lot about Wynn Resorts, right? And we're going to still get into inflation, what that means for the market, and all those sorts of things. But I had to mention Wynn because this is a stock that we don't talk about very often on the channel because obviously, there's so much going on with Meta and Palantir and Tesla and some of these other more popular stocks. So we don't even get to talk about Wynn. Wynn Resorts is actually in a great position, which I don't know if you guys know, they got 2 properties obviously here in Vegas, so the creme de la creme properties. They have 3 properties in Macau, two in the old part of Macau, and then they have Wynn Palace, which is the granddaddy of them all. They also have Wynn Boston Harbor, and they're actually building a property now in the Middle East that's going to open here in the next couple years. So Wynn's obviously just a solid company, really well run. They've always been like that, but Macau's starting to tear it up again, guys, okay? Macau GGR, gross gaming revenue, just came in at nearly $600 million in the first 9 days of July, says JP Morgan. Now, you might not know, like why is that relevant? Like, what does that mean? Well, here's the deal, okay? At this level, we believe mass GGR is comfortably running at 90% plus of pre-Rona levels. And we continue to expect 100% plus recovery in mass by October. This basically means Macau is back, baby, okay? Which means you now basically have the go-ahead to invest in companies like Las Vegas Sands, Wynn Resorts, and others now at this point in time, which is phenomenal because those ones have kind of been scary off limits for a long time, as in like 3.5 years, if not close to 4 years now, those stocks have been off limits because until you could really comfortably see Macau getting back to what it used to be and then hopefully growing from there, they're kind of untouchables. But now we finally at a moment where it looks like they can actually be investable opportunities. They can actually be buy the dip type stocks, building out to nice size positions, which is huge. So I might consider actually starting to add to Wynn stock again now at this point in time. We'll see what happens. I got to relook at valuations across the board, kind of what my expectations are for future years as far as Wynn's, revenues go and as far as their bottom line goes. So we'll see what happens there, but I can tell you things are looking pretty promising. And then that property in the Middle East, the thing is, okay, there's not a lot of competition in the Middle East, and especially for a property like Wynn, it should be very interesting to see the sorts of numbers that property puts up over time, okay? So nonetheless, folks, a lot of exciting things going at Wynn, and it's kind of one of those sleepy stocks that goes under the radar, but I really like what's going on there, okay? Now, S&P 500, NASDAQ closed at their highest level since April of 2022. Obviously, with inflation coming in better than folks expected, that was massive, right? The consumer price index increased 3% in June relative to a year earlier, a slowdown from the 4% in May. It's a 50% slowdown, okay? 50 flippin' flapjack in percent. That's massive, right? Now, you got to understand, like Wall Street, from what I saw, Wall Street was pretty much around 3.1% on average, so we came in better than expected. But that's actually not the bigger factor. The bigger factor we'll get into in just a moment, okay? The CPI is a key barometer of inflation, measuring prices of everything from fruits to vegetables to haircuts, concert tickets. June's reading is the smallest 12-month increase since March 2021, around the time when alarm bells started sounding about the fast-rising prices of Rona era. A significant pullback from the 9.1% in June of 2022. And just to be honest, all of 2022, we saw ridiculous numbers, so we got much easier comps. Now, to put into detail where we have problems and where things are looking good, okay, these are things that are holding us back. And in terms of getting that CPI down even more, motor vehicle repair, 20%. As somebody that just paid $3,000 for my Model S plaid tires. Frozen vegetables. No wonder that frozen vegetable company went under. Frozen vegetables, 17% up on a year-over-year basis, right? Motor vehicle insurance, obviously up almost 17%. Part of the reason is vehicles have obviously increased so much in price over the past few years that it's more of a risk to insurance companies. If, vehicles are just more expensive, like you're going to have to pay more insurance. Like if you got a Lamborghini, you're going to pay a whole lot more for that insurance than a Toyota Corolla. That's just simple math, okay? Candy and chewing gum, seriously, up 13%. Pet food up 12%. Leased cars and trucks up 11%. A lot of these bigger things, these are what I call catch-up plays. And basically what that means, and this is very important for everybody to understand this, is transportation in 2022 went to the moon, okay? I'm talking about if you're shipping from overseas, if you have to truck things around. And so a lot of these companies that have to ship bigger products got absolutely screwed in 2022. Now, they've all gone up on price over the past 12 months to compensate for what they were paying for trucking, fees and everything transportation-wise. Now, transportation's fallen through the floor over the past, specifically really like the past 9 months or so. So pet food, yeah, it's up considerably, but it doesn't have to go up anymore now at this point in time. And the reason it doesn't have to go up anymore now at this point in time, you don't have to keep pushing price, is just because no one in that space has to do that anymore now at this point in time. So if they do that, their competitors will take market share. But the whole space did it because you transporting a big bag of dog food around or whatever, right? It was substantially expensive because trucking rates were so ridiculous in 2022. Those days are long gone now at this point in time, okay? Leased cars and trucks up 11%, bread up 11%, sugar up 11%, okay? Now, calling it mid factors, carbonated drinks up 9%, rent of primary residence up 8.3%. Get ready for that baby to keep going down, okay? Let's put it that way, especially as inventory continues to loosen. Wine away from home was up 6.7%, postage up 6.7%, electricity up 5.4%, food at home up 4.7%. Now, in terms of things that are going down, recreational books down 3.1%, used cars and trucks down 5.2%, eggs down about 8%, television down about 10%, bacon down about 10%, major appliances down about 10%, car and truck rental down 12%, and then obviously energy. The one I thought that was weird was health insurance down 25%. I don't know what they're taking into account there. I don't know if there's some sort of government program. I don't know, but I thought that was the weird number. Most of them I can kind of wrap my head around. That's the one I'm like, I don't know about that, okay? All I know is my health insurance is probably more expensive than it's ever been, okay? Now, this is all, obviously good news. We still obviously are not where we need to be. CPI needs to obviously get to the 2s, which is where the Fed wants it. But the fact that we're down to 3 is great news for us, okay? And that's not even the best news in just a moment. But in terms of should this trend continue, likely, yes. We should likely be CPI, I would say, in the 2s, obviously, next month. It's just a question of, is it 2.9, 2.8, 2.7, 2.6, 2.5? So everything's really going our way in terms of where we need it to go in terms of inflation. This matters for the stock market in a significant way. The reason this matters in the stock market in such a significant way is a few reasons, okay? And the first one is, obviously, inflation hurt the consumer in an epic way in 2022, and that's why we saw consumer confidence go to the lowest we've seen it in terms of Michigan consumer confidence in history, right? So Obviously, inflation coming down helps the consumer out. The second reason is it makes the Fed likely not have to continue to increase rates forever and ever, which takes the Fed scariness out of it, right? A third component of this is companies don't have to deal with this insane inflation and have to keep this kind of like wage price spiral going, which adds more stability for the market overall, okay? So, and there's other various reasons why this is good, but those are just some of the big ones that come off the top of my head. So bottom line is this is why the stock market's up very nicely here today, okay? Now, the even more important thing is, this is even more important for a lot of folks in the market, is the measure, so-called core CPI, hit a 20-month low of 4.8%. Now, this gentleman says, Capital Economics, he says, potentially even more encouraging than it looks, as wholesale auction data from used car points to a sharp decline in prices over the next couple of months, he said in a research note, right? Now, core CPI is something that a lot of people have been looking at as like the one scary part. They're like, well, CPI is coming in, cool, but core CPI is still running too hot. But it looks like core CPI is going to fall quite dramatically over the next few months as well, which basically, you don't really have much to go off of. Like the bears are running out of things here, and bears were expecting core CPI to be in the fives. Like every single bear pretty much out there was expecting core CPI to be somewhere in the fives, and to come in at 4.8% is definitely welcome news. So, the bears are just running out of ammo here. That's the best way I can put it. They're just running out of ammo. Like everything's working against them time and time again. Now, in terms of what Jerome Powell has to say, now Jerome Powell can easily come in and kind of be middle ground. He doesn't have to come in some hawkish man. He doesn't have to announce victory. We haven't completely beaten inflation. Everything's going our way. Great. But we haven't beaten it yet. So he doesn't have to come out here and declare, he won. He doesn't have to come out and declare that, we're going to be higher for longer. Still got long. If he wants to come out and be super hawkish, he doesn't have to be. Like there's no reason to be that. And I think the market will look at that as just like, even more as like, you're a joke, dude. Like if he comes out and he's super hawkish, it doesn't make sense. It literally doesn't make sense. Everything's going our way and it's getting better and better. Commodities are staying, in where we need them to be. So he needs to come in and be middle ground Jerome Powell. He doesn't need to come out and admit, say we beat this thing. He doesn't need to come out and say, it's got a lot of pain ahead. He doesn't need to come out and be Jackson Hole Powell. He doesn't need to come out and be, 2021 Powell. Be somewhere in the middle. Say, everything's going our way. We like what we're seeing. We're prepared to keep rates higher if we need to keep them higher. We'll be data dependent and see how things go. And so that's kind of, where he needs to be. But if he's going to strike some super aggressive tone either way, it just doesn't make sense at this point in time, okay? Now, obviously that's going to move the market in terms of what his opinion is, kind of how things move there. But the other factor is we still got this week earnings coming, right? And from some very big weights in the market, okay? I mean, Delta, Pepsi, obviously a very big weight. Fastenal, big weight in the market, right? Progressive, decent-sized weight. And then Friday, obviously, with JP Morgan, that's a huge weight in the market. United Health is the biggest weight in the overall Dow 30. So that's a huge weight, right? It's also a big weight in the S&P 500 as well. Then you got Citi, Wells Fargo. So depending on if these banks have pretty good stuff to say, and they say if these banks are basically have an opinion based upon what they're seeing in their businesses, that things are much more clear than they were 3 months ago or 6 months ago, that's another huge factor and a huge sigh of relief to the market. Now, if all these banks come out and say, we're super scared, we're super worried, things are even more cloudy than they were before, down we go. But as long as these banks say things are looking more clear than we thought they were 3 months ago, last time we spoke to you guys, that's a next leg up for the market there, okay? Because everybody's going to have their eyes on that. And everybody's kind of looking for this last kind of like confirmation of to be bullish or kind of give up on the bear case. And we know the bear case has been kind of getting decimated more and more as this year's ticked on. If you have the big banks come in and say, business is good, we don't have any big loan losses, guidance is strong, things are good, like that's next level up. That's how you get this S&P 500 on its way to 5,000. That's how you get, stocks like Meta back to all-time highs, stocks like Tesla back to all-time highs. That's how you do it. Stocks like Amazon back to all-time highs. If we can get clarity from the big banks, that's everything. So, and then obviously coming into earnings season, you get big tech next week and the following week, and then you just kind of get the mids and smalls after that. And I think for a lot of these mids and smalls, you're going to see increased profitability. So meaning the companies that were losing money are going to get closer to profitability. The ones that are already profitable are going to get much more profitable as this year ticks on, which is something I predicted, and I think I'm going to be 100% right. We'll see how it all shakes out. I think margins are going to expand across the board for, I would say, the majority of companies in the back half of this year. I think you're going to see considerable margin expansion. Not small amounts. I think you're going to see considerable margin expansion in the third quarter and fourth quarter for countless companies out there, smalls, mids, and a lot of large caps. So if that plays out the way I think it's going to play out, that's how you get all the indexes to all-time highs and a lot of these stocks to all-time highs, right? And then we kind of start thinking about 2024. What are we planning on there? Is the Fed going to cut at some point? Or, and then we can kind of worry about all that. But that's, kind of, I'm thinking about this next kind of, few months here and kind of how the market shakes out. As far as my positioning in the market, you guys know me. I'm always going to continue to obviously buy stocks and take advantage of opportunities I see out there in the market, which there's an immense amount of opportunity still. PayPal is on my mind. Win might be on my mind soon. FL and a few others are on my mind as well. So appreciate everybody joining me as always. Thanks so much for being subscribed, folks. I actually just last night I put together a free resource for you guys. It's a stock picking checklist. It's going to be the pinned comment down there to get access to that, and I can go ahead and send that over via email. This is my personal stock picking checklist. It's 15 parts. Basically, if you have yes for 12 or more of these, that's usually a good sign for me for an investment opportunity. If there's less than 12, then usually it's like maybe not. If it's usually less than 10, then it's like, nah, this isn't even worth it for me. So yeah, if you want access to that, it's a pretty cool little free resource. Check out the pinned comment down there. Much love as always, and have a great day.